to give you some of my work this week off the charts. Just kind of want to like help you guys like understand like price action, market structure, psychological levels, trend lines, use them, break and retest. I'm gonna try to do my very best to like show you guys um, how I entered the market this week, and I'm gonna show you a trade that I actually won in London. I'm gonna go ahead and like share screen. Share screen. All right. No. All right. I'm gonna go ahead and put my phone down because it's on the charger. So I'm gonna go ahead and like my video. All right. So I'm in this trade on NZD USD right now. We can get back to that later. Let me go ahead and take my session breaks off. It's a beautiful trade right now. I think GJ is still in profit. This is so beautiful. Okay, so before I even like get into talking about trading, let me go ahead and take all this off. And I just really want to like show you guys something very clear that you need to like be paying attention to. Like you need to be waiting on your setups. You need to know what you're trading and why you're trading. I think a lot of times we don't ask ourselves these questions before we get in the market. So we're so quick to make money and we forget that this market is very fractured. Excuse me, it's very this market is very volatile and it just moves in ways that we know that the market just gives us like at the time, it just doesn't give us exactly what we want whenever we want. We just have to be very careful on not being impulsive. Sorry, I was getting my words mixed up. I'm trying to be quiet because I have a roommate on talking on the phone, so like I'm trying not to be loud. So I want to start with GBP USD and the trade that I caught. Now we can obviously see, you know, on the 4-hour time frame that GBP USD has, you know, been very strong upward movement, and so like technically we should be looking for, you know, looking for buys, correct? Now I've noticed that like there has been some bearish momentum here, and I know a lot of people probably have been selling this. And how do I know? It's created a downtrend and a macro uptrend. You feel me? So anytime you see a downtrend and a macro uptrend, the market is more than likely to continue in that downward channel. And what technically usually happens is once it reaches a level of support or a psychological level of demand zone, it would then buy back up. So how did I catch a buy? Well, technically, you can do this from 4-hour time frame. I like to do mine from 1 hour, but you can technically like just draw this line right here. Now some of you guys are wondering like, okay, well, what if like the market's right here? I mean, it doesn't matter. You still would have got you like the market broke out this trend line. You would have got you an easy 72 pips. Like, see, this is the thing, guys. Some of you guys who are trying to hold trades, that's your issue. There's nothing wrong with swing trading, but if you know that you're trying to compound your account, you need to stop holding your trades. You need to start getting in for like 10 to 30 pips, 10 to 50 pips, make up whatever you want to make up and just get out the market. I was in for about 20 pips today, made my bread, and I got out. And I think a lot of times we just want to hold our trades because we want to, it's basically, we're just greedy. And we need to change that. So let me tell you what I did, how I caught GU. So I put this trend line right here. At the time, GU was right here. Now, some of you guys are thinking, okay, like what happened? Like, how did you, catch this, break? Well, if you recognize here, this is a level, a psychological level, right? This is where the market has touched one, two, 3, 4, 5, 6, 7, 8, 9, 10 times. And so, I mean, look, it's even blowing past through as a sell right back down through the psychological level. Now, what I'm getting ready to say is this is how I scalp the market. This is how I get in, get out. Okay. So let's do this again. Let's just, you know, um, take this level off. Okay. So let's just go on the hour time frame, look at it from a closer perspective. Okay. If I know that this is if I'm waiting for a break out of my trend line, then all I'm doing is looking for a particular level that's very psychological. Wait for that break and retest. See, here's the issue. Some of you guys aren't willing to wait for a break and retest because you guys are so greedy and you guys become so impulsive that when you lose, it's because you're not technically waiting. Now, there's two ways you can do this. Okay, you see this area right here. This is where the area of breakout. Okay, anytime the market breaks out with a hard push, you know you're bound to have a pullback. I'm gonna show you two entry methods. Okay, all right. Let me see if this can work on the 15 minutes because I sometimes get my entries out the 15-minute time frame. Well, I think maybe the 30-minute. If not the 30-minute, then the hour time frame is the best. I mean, we can use the 30-minute. I think that hour time frame is the best. All right. So the market has broken out of a level of consolidation. Okay. How do I know this market is ranging? So right here, it's just been ranging in this structure. Nothing's happening. Okay. This is very important. This is a very, very important level that is very psychological and it's ranging at the same time. All right. So what do? I wait for a breakout. Now, there's two things you can do. One, you can wait for this breakout, okay? And at this psychological level, let me go ahead and mark this up for you so it's very clear. Where this blue line is, okay? On the psychological level, make that a little thicker. There you go. Psychological level. This bullish candle right here closed above structure. Now, some of you guys are like, well, it's at the high today, the low today, whatever. Look, that's cool and whatnot, but at the same time, trade what the market gives. If you know that the market is bullish and is closed above a psychological level, then it's telling you that it's going to buy. Now, sometimes the market engulfs that bullish candle, and sometimes it's a loss. Hey, that's the way of the game. Sometimes the market will come back down and close inside. If it closes inside, that's when you want to look for sales. Okay. But I'm just giving you guys something very simple, a very simple strategy. So once that bad boy has broken out of structure, you can get in. You have to wait for this 1 hour candle to close to make sure it closes correctly. You get in on this candle. It pulled back on the open and then it went right up. Okay. Now, where will your TP will be? It will be at these highs. Okay. There's one high, two highs, two highs. It's too much height. Shoot, if you're looking for 15, 20 pips, right here is another high. Okay. Which, I'm not going to be trading that, but I'm going to be trading all the way up to these highs, So shoot, like soon as I bought, like where would your stop loss be? I know that's another question. Like, well, Jonah, where's your stop loss? Well, it's below structure. Okay. You don't want to put it anywhere where the market is above structure because that's where the market is more liable to retest. If it comes back and engulfs a candle, the breakout candle, then more than likely your setup was invalid. And sometimes, it's just manipulation of the market. Of course, we all know, how the game plays. So look, some of you guys are like, oh, Jonah, like, how do I where I put my stop loss? Where's my take profit? Okay, breakout candles happen. Okay, it closed above structure. Where is your entry? Right here. Okay, entry's right there. And your stop loss is right below this candle, which is a 26 pip stop loss. Okay, do not over leverage. You have to accept your risk once you get in the market. So do not over leverage and don't get mad at somebody else because you, or don't get mad at the market because you took improper risk management and you like almost blew your account, or like you traded at a high risk. Okay. But notice this: soon as it came down, you were probably in a little to none drawdown, like probably like a 2 pip, 3 pip drawdown, and then it shoots right back up, shot up 46, 47 pips, even shot up more to 98 pips. That's 100 pips right there. Okay. Easy bread, guys. So look, I'm not saying this is going to happen all the time, but when you're patient, this is the things that happen. Okay. All right. Number two, what else happens? Let me see something right quick. My favorite retracement. Nah, that's not it. Okay. It's not going to happen on here. I'm just like checking something out. See, even right here, let's just say, take this, this level off. Excuse me, this trend line off. Even right here on the psychological level, what did the market do? It broke. Dang. It broke, and what did it do? It retested. What happened after that? It went back up. So, guys, like break and retest is like the most simplest strategy. You just got to know when to do it, and you have to pay attention to the candles. Okay. So if he's like, you know what, I'm just gonna wait. Then on this retest, what's crazy on this retest is you can wait till after to enter right here. And then where would your stop loss be? Because engulf that candle, your stop loss would be below this candle and you ride it up. Okay. So the next level market structure, it could technically be right here, just because that's another level, another psychological level. It broke through that level, but that would have been like 72 picks. Guys, I'm not making this up. That's off the 4-hour time frame. You look at the 1-hour time frame, it's the same thing. As soon as this bad boy turns bullish, you could put your stop loss right below here, and you would have had, let me see, a 19, 20 pip stop loss. Okay, so that's how I caught GU. This was from this morning. I caught that. Okay, this is what I call. Okay, let me go ahead and just redraw this. Okay, so at the time, the market was where? It was right here. Well, you know what? Let me start off with the uptrend. So this whole week, the market has been doing what? Been on an uptrend. Okay. Well, I know for a fact that if it's Friday, the market has been very bullish. At some point of given time, it's going to reverse. And some people are like always thinking that, oh, because the market is buying, it's going to continue to buy. No, the market is going to retrace sometimes. There's liquidity zones of people buying all the way down here. I'm telling you guys, it's not going to be on a bull run forever. It has to retrace. Well, Jonah, how do you trade under reversal? Well, I definitely don't care for M's and W's. I don't care at this, M happening and then like having my stop loss above there. I don't do that because we know that the market is liable to do this. And I hate that. I hate that. You lose so much money trying to bank off of a stop. Same thing with the W. I hate that. Like, I don't trade those. I don't trade M's and W's. What I do trade is the shift out from an M or W. And then I'm looking for a particular support psychological level to be broken. For me at the time, it was here. Now, why here out of all the places? Why not here? Well, it could be here too, plus it broke my trend line, right? The reason why I said here is because I realized the market has been bouncing up and down and up and down for a very long time. It's creating this downward trend channel, and it's just playing around in this area. It's liable to break this area. There's another set of pattern of wicks here, And I noticed that if anytime it breaks below these wicks, I'm looking for a sell. It busted out of my zone, closed, like I said, guys, before what? It closed this candle right here, closed below my level of structure. What did I do? Simple. This is what I did. I shorted it right here. Where I put my stop loss right here. Oh, Johnny, man, that's a tight stop loss. Look, if it wicks me out, it wicks me out. That is 11 pip stop loss. Now, why is my stop loss right here? Because I know that if the market comes back up and wicks me out, the trade is invalid. Okay. Now, where's my TP zone? My TP zone is to the next level. Now, if I was swinging the trade, can I like necessarily like just go? I can continue to swing the trade down to this next level right here. But like I said, guys, I'm trying to be in and out of the market. I'm not. Now, look, you see this bad boy dropped during London. This bad boy dropped like 91%. I could have been up, to be honest. I don't flex, but I could have been up $1,000, the particular light size that I had. But look, I'm just trying to get in and out of the market. And hey, it is what it is. If it stops me out, stops me out. If it goes my way, goes my way. And that's the issue with you guys. You guys are trying to perfect your entries. You guys are trying to be, you guys are so afraid to get in the market, and it's the reason why you are losing. Because you're afraid to get in the market, and then when you want to get in the market, it's too late. See, some of you guys are trying to catch the market while it's down here. You see, you guys need to be catching the market when it breaks a certain level. And look, if you miss this level, look, very, very easy. If you miss this level right here, wait for a pullback like it did, pull back right here, and then what happens? Put a sell stop right here, and then put your stop loss right here. And when it comes back down, boom, and then I'll show you what you do. All you do, you short it right here in your entry. Where's your stop loss? Above this structure, okay? How many pips is that for stop loss? It's 15 pips. The risk to reward, well, your TP can be down here. It'd be like what, 20 pips, okay? If you're risking well, 20 pips would be good. And like you said, if you believe that if you see this engulfing candle, in my opinion, I'll hold it to the next level. Like I said, I use pivot points as well. I don't have the pivot points. I don't know what happened. You see templates. Pivot points, high and low. So even the pivot points high and low give you the numbers. So you get to take profit right here. Next level, psychological levels right here. You take profit. So guys, that's how simple it is. This is how I trade. Like let me give you another example. This is a trade that I was going to take, by darn flipping missed it. And that's okay. USD CAD has been on a hardcore downtrend. Okay. We all know that USD CAD has been bearish like crazy. Okay. And you can, look, you can necessarily just put trend lines on here, trend line break. All right. Trend line break. All right. If it's in sales, trend line break. You can literally sell the market all day. But if you want to be safe, like I was, at the time, the market was right here. And I just put this level, psychological level right here. What am I waiting for? I'm waiting for sales. Okay, what do I wait for? All right, I wait for the market to come down. If it starts playing, okay, close above structure. I'm not selling yet. Now watch, it broke the low structure. All right, soon as that next candle happened, I saw it come back up. Put my stop loss right here. Oh, we shorten it, right? Probably would have waited since it wicked a little bit up there. Stop loss would have been, oh, that's a 4 hour. Sorry, guys. That's not correct. I would have entered a little bit. It closed below this zone right here. As soon as it closed right there, stop loss will be above the structure, 22 pips. It could be 33 pips, whatever you want to go for. And there's technically no level of structure until, let's see, till like right here. Sorry, that's not the right one. To right here. Boom. What's that already? USD CAD dropped about 106 pips. So I'm just going to tell you guys, like, a break and retest is viable. Now you're prone to fake outs. Yeah. Look, the market is not always going to do what we want it to do. The market does like this, to this, boom, it can do this. Okay. That's why you need to get in and get out. It's totally fine. Some of you guys like, oh, well, I trade, M's and W's. I trade, the market making method. I trade, the high of the day, the low of the day, the high of the week, the low of the week, etc. Look, this is. Let me go ahead and just like get straight with you guys right now. So it doesn't really matter that the high of the day, the high of the week, the low of the day, the low of the week, the low of whatever, the high of whatever. Those are really good strategies to follow. Yes, and I understand that the market is liable to reverse, but it's only good for the market going into its intended direction. So if the market's at a high today and the market is overall sells, but you see it buying, then of course you can wait for an M formation and wait for it to sell. And vice versa with a W formation, in a down in the uptrend, but the market is going down, then it shifts upwards. So what I'm saying is, I don't get caught up in all that. I don't get caught up on that. I take what the market gives me. If you just take what the market gives you make it so much easier on yourself. Me and my friend was talking about this. Like, some of you guys just like want $100, $200, $300, $400. Like, okay, I made like $234. Okay, cool. Like, could I make more? Yeah. I mean, I honestly could have, held on GU. I was in GU sales. I could have held on Euro USD. Now I'm really heavy right now. I'm still in the sales on NZ USD right now. And look, I literally could have just held all my trades. This is the only trade I'm holding right now. But I decided not to because it's foolish to like get greedy. And this is what I was saying, unless you're a swing trader. But this is what I'm saying. If I came and gave you $100 bill every day, would you not take it? Would you say, oh man, this is not enough? Like, me and my friend actually made this analogy. He was like, if somebody gave you $100 bill, would you not take it? Would you say, oh man, that's enough? I want $200, I want $300. We don't think about compounding like that. If someone was to give me $100 for free every day, I'll take that every day. Do the same thing for it. Whether it's $10, $40, $50, $100, $1,000 a day. Just take your money and compound. Stop trying to swing the trades. If you want to swing trade, and make sure that you're not emotional. But the reason why some of you guys aren't up for swing trading is because you guys are so emotional. That's why I'm just here to get in and to get out the market. I got things to do during the day. I'm not trying to stay glued to the markets all day. You guys shouldn't be either. You guys should treat Forex as a way to be financially stable. I blew accounts. I knew what it's like to blow accounts. It sucks. It hurts. But some of you guys are still wrestling with that greed. I want more. I want more. You keep putting yourself in the same predicament. Look, I know I've blown $500 account. Now I've blown $1,000 account. I know what it's like to lose a ton of money. But now that I know what I'm doing, hey, we're just on the way. We're just making the market out of whatever it gives us. And I think the other struggle is, I think a lot of times, bro, like, I think a lot of times we try to follow strategy step by step. Like, let me back up. I think a lot of times we try to mirror everybody else's strategy. I think a lot of times we take a trade based off of a mentor or somebody else, but we never get the chance to look at the market our own, like ourselves, and say, hey, this is what I see. I think a lot of times we wait for the market to just like say, hey, once it gets here, it's going to do exactly this. but we're not actually examining the candlesticks. We're not actually examining the momentum. We're not actually examining the overall trend. We're just simply just guessing and say, when this happens, I'll enter a trade. That's guessing. Like, yes, this market does not 100% give me what I want either all the time, but this is what I will tell you. If you get in the market when the market gives you what it gives you, boom. Clear example. Be my last example. But for clear example, I'm in NZD USD right now. Some people are like, oh man, you selling? Like, why are you selling, bro? Like, it's on an uptrend. Well, shoot, it broke my trend line. And if you really think about it, it broke this area right here. This is an area of psychological level to me. So once this bad boy breaks, especially if it kept breaking right here, I ain't waiting on no closure. Why? I don't need to wait on no closure. I'll sell right there, right here in the middle. Put my stop loss above there. Now this is an hour time frame. I probably would not have done it like that. So, oh yeah, that's pretty good. 25 pips. Right now I'm in, 25 pips. I'm pretty sure I sold it like somewhere right here. And where's my take profit? I got another account, so I'm swinging this one. On my other account, I usually, scalp. So I would have been out of this account if I was scalping. But like, yeah, I'm swinging this on my actual other account. So like, like I said, guys, like some of you guys are scared to get in markets. I'm like, oh man, like let's put up session breaks. Some of you guys are, oh man, is at the high, the low, the low today. So the market's gonna come back down here. It's gonna do this W formation and go back up. Well, technically, if you're bullish, then yeah, it should. But if you see this hardcore shift like that and with no rejection and closes bearish, man, you better hop in that sell. That's all I gotta say. And like I said, some of you guys are afraid to hop in that sell. Some of you guys are afraid to take the trade. I had to learn not to be afraid. I don't care if the market is selling or is buying. If the market gives me confirmation, if it broke this level of strong support that most people are buying, and it's been in an uptrend a long time for a very long time, and it broke with a engulfing candle and closes, best believe I'm getting in. I'm even getting in on a pullback, or shoot, I just go ahead and take the risk and just put my stop loss above here, because here's the thing. And I'll go ahead and end this video with this. If the market, since I entered right here, if the market pulled back, came back down a little bit more, and then it pulled back again and just went continuously up right here and stopped me out, then I know that I'll be looking for buys. Why is it that? It's just that easy, guys. You're either gonna win or you're gonna lose. Some of you guys are, man, I'm trying not to pop your head off, but like, I just see so many traders, man, losing because they overthink it. That was me, guys. Trust me, that was me. I used to overthink it so much. I was like, man, this bad boy broke. Man, I feel like it's about to buy on me if I go in. See, that's why you're losing. You're overthinking. It's either you stay out the market or you get in the market. You choose. So that's all I'm gonna say. Yeah. So this is what I'm gonna say, guys. You're either gonna get in the market or you're not. If you lose, you lose. That's the way of the game. If you win, you win. I'm still on my journey. I'm not 100% where I want to be, but I'm in way better position than I was before. So I hope you guys enjoyed this video. And I do have a mentorship program coming out really soon. The details will be on my next video. So I'll stay blessed. Have a great weekend.